maybe start with the dotted line. We see like black is gold, the development of the gold price since 2017 up to 2023. And the blue dotted one is the S&P 500. Then we have the blue line, which represents wine from acres.com, and whiskey, that's from the Rare Whiskey 101, the Apex 1000 index, and watches from Watch Charts, the price development of that index. And maybe we start with the stock market, and then we see like in 2020 the huge drop in the market. So that was obviously when COVID hit us. And then we see as well in 2022 again how like the huge volatility with the quite significant drops all the time again, which we see with the Ukraine war and the current inflation and recession scenarios which you're having. And if we compare them, like what the whiskey prices were doing exactly 2020 when the stock market crashed, or what it did in 2022 when the Ukraine war was there, and this is like where we see this correlation, what I was referring to at the very beginning. So those prices they keep stable or even increase during those times, and this is why they're like awesome assets to add to your portfolio to kind of reduce your overall portfolio risk.
So to summarize for the people listening, the interesting thing about this graph is not especially like the value development, which is nice, of course, it looks good, but the really important takeaway here is that we see that low correlation, especially in situation of market and stock downturns, as you said in 2022. So that's really where those asset classes shine and where it gets interesting. So nice point and nice chart here. So now if we think about the retail investor, which probably has some stocks, some ETFs, maybe real estate, some small house himself, how would one venture into those markets? Should he now sell the whole stocks he has, the house he has, and basically put it all into those alternative investments, or how should we go about this?
Yeah, it's a very important point. There's like this phrase out there: "Don't put all your eggs into one basket," right? And that's very important when it comes to your individual portfolio. So you should have a wide coverage of asset, basically, because every category and then every product within this category has different associated risks, has different correlation, and the more diversified you are, the better or the lower is kind of your portfolio risk, and the more stable your portfolio will as well behave in more turmoil times like the ones which we have now. So no, don't put everything into those products. That's for sure. You see as well like people who invested everything in watches, like they were super happy since 2017. The match was like went up to over 250. But then suddenly there is again, like after this huge increase, there is again a correction in the market, and that happens as well with those products. So it's really, the message is spread as wide as possible through all asset categories, and it's as well, this should not be the majority of your portfolio. I mean, the ultra high net worth individuals, they're doing that since years. They're just like purchasing directly the blue chip art and hanging that in the living rooms, or having the all-time Ferrari directly in the garage. So they have like around 5 to 15 up to 20% of their portfolio is invested in such alternative assets, so in the physical alternative assets, and the rest is still in real estate, is invested in hedge funds, private equity, and in traditional funds. So they really have like a wide range of diversity. And so I would really say like 5 to 20% of your portfolio in physical assets. That's probably the direction you should go, but not everything.
Okay. Really good points. So we use those asset classes to really diversify the portfolios of retail investors. Very good point. Now we've talked a lot about what's really already on the platform. So we have the whiskey casks, we have the bottles, we have the wine, we also have other things on there. Now maybe can you give the audience some hints on what is going to come onto the platform in the future? What can the users and the investors expect?
Happy to do that, and we're as well very excited about that. It's always super interesting in opening up new markets. That's point A. It's not always that trivial to go into that. We are at the moment, we know we will bring that pretty soon, is classic cars. So that's one category which, as well, our users all provide us feedback. Hey, we would love to see classic cars in the platform. But there we're talking a lot about ticket size, about the it's kind of the shape of the car, like what condition the car is currently in, and to really assess that and be sure that you really get the right car. So it's not just like buying a bottle of whiskey or a bottle of wine. So there's more behind. We're as well looking at crazy categories like horse breeding. We're looking at cigars. We're looking at yachts. So we're really like covering a full range, and there will more to come on the physical asset side. But we're not only looking at that. So what we know is that the retail investors which we are serving, they have as well a need for private equity investments. So kind of the financial product, that this is what we as well have on our roadmap, to bring private equity onto the platform so that people can invest in either private equity stakes or as well into venture capital vehicles.
Excited. If you like this conversation, you can download our app, visit our website splintinvest.com, follow us on social media, or subscribe to our newsletter, where you'll be informed about the newest podcast episode. Thank you for this, and until next time.